So the past quarter saw much stronger returns, and that's particularly off the back of the very difficult March quarter returns. And it was right across all the options, from shares having double-digit returns, even the conservative option recorded a 3% type return. And that's beneficial for our members, and it helped them have a much better year than initially forecast. Having said that, we think the markets have recovered a lot quicker, given that we are still in a recession and it's a difficult environment with this COVID-19 and with the second outbreak in various parts of Australia. In terms of the strategy, we haven't changed. We still prefer diversified portfolios, and we are running a little bit higher cash to take advantage of these conditions should they change. There's been a strong policy response not only in Australia but globally because of this outbreak. And what we're seeing is very strong budget deficits. Budget deficit is like a fiscal stimulus into the economy. Central banks around the world have drastically lowered interest rates and doing what they call unconventional monetary policy. And basically this is to provide financing to businesses and individuals to get through to this environment. And because of that, what we're seeing is stronger returns, as discussed earlier. In terms of our strategy, we've maintained very well broad diversified portfolios, and to make sure that we're in good stead whatever happens, that they can deliver over the medium to long term. The ongoing effects of COVID-19 for the economy and markets are unclear, and therefore the way we approach it at Statewide Super is to maintain well-diversified portfolios. We are running slightly higher cash across the multi-sector options, and that's by design to take advantage of any opportunities as these markets become more volatile. It's a question that's asked frequently: when is the right time to invest in the stock market? And our response is, if you're a long-term investor, investing in the stock market is right for you if you have a longer-term mind frame, i.e. greater than 5 years, but also importantly to have a diversified portfolio of shares, but in particular have a diversified portfolio of other asset classes as well. So it's never the right time to buy or sell, it's depending on your outlook and how you're going to approach it. It's very important for members, particularly in the last 6 months, we've seen an unusual environment where their superannuation balances, their retirement has been impacted by this outbreak. And I think it's important to come and see us and get advice to see, have you got the right strategy? Do you understand what you're invested in? And what's your long-term goals to meet your retirement needs? So we've just closed our 7-year track record for the MySuper option, which is our default option, and it's been a pleasing return over the long term, as it's designed to be a 7-10 year strategy. It's returned 8.42% per annum over the last 7 years, and it ranks us number 5 out of 38 funds with similar MySuper options in the country. And that's how the option's designed. It's designed to be a medium to long term, to take advantage of good markets and conditions and to generate good returns for our members. We've always run very well diversified portfolios with good cash, and therefore we've had very good liquidity. And as discussed in previous updates, we went through daily stress testing, asset allocation reviews, and so therefore we've been able to process the early access and to pay our members their needed cash requirements with no major interaction or no major issues in terms of our investment portfolio and how we process our strategy. So there's been no issues in that area. So members have to always think about what's their long-term goals in terms of retirement, balanced against what are their needs if they need that access to super. And the important thing for us is we're there to help you. If you need to answer that question, come and see us. It is a double-edged sword. Do you need the money today to get through some issues that you need, whether it's because you've lost income from your job, you need to pay debts, or you need to get through this environment? Or do you want to think longer term and let that balance compound out so when you retire you have more income to support in your retirement? And I think that's a question that's best asked by coming and talk to us. So unfortunately, investing over the long term means that every 7 or 10 years we get an event where we get negative returns for super, which means your balances fall. And for those who are much younger, this is part of writing out the long term, short-term market movements for long-term returns. And I'm going to use MySuper as an example. Over the last 7 years, it returned 8.42%. But over this last financial year, it was down over 1%. This is a good example. Previous to COVID-19, we obviously had the GFC in 2008. So those that are younger, it's the ability to ride out these market cycles to generate longer returns. For those entering retirement, pre-retirement or in retirement, it's more important to have a more diversified, slightly more conservative range, and therefore the diversification kicks in. So when share markets fall 20 or 30%, you only feel 10 or 20% of that impact, so you don't get the negative return that you get in the markets. And this is the key to investing. You have a longer term mind frame if you're younger, and as you get older, you have a more conservative approach.